All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. It is Wednesday, October 19th. Let's go to work. Dow futures down 139 points this morning after being up as much as 180 last night. NASDAQ down about 0.58%, even with the Netflix beat. S&P futures down 0.58%. We're going to go over the SPX chart together. I tweeted that and posted it on Instagram. Russell 2000 index is down 0.83%. Glad we got out of those IWM calls yesterday. Light sweet crude oil, WTI, up 1.5%, even with the Biden administration talking about draining more of the Strategic Petroleum Reserve, the SPR. The dollar up 0.59%. So energy showing some life this morning. So keep an eye on energy stocks today. I was going over some names, shopping list. Obviously, I talked about that yesterday and again on Instagram Live with Nick. If you didn't check out that Instagram Live, I highly recommend you do. I talk about a bottom in the market at 200 MA. Take a look at that. Anyways, so back to it again with the dollar being up 0.61%. Crude oil futures are up as well. So again, starting to see some strength there on that. Let's go ahead and go straight to the dollar. We'll talk about it here. The dollar right now is up 0.61%. We are now reverting back to the 200 MA on the hourly. Remember, we talked about that break. Very, very key. Again, for us to really start getting, the target of 3,800 or 3,820 or so, or even higher, 3,900 on S&P, really want to get to around 110 on the dollar. We need to get to the 50-day moving average. We're not there yet. We bounced above the 20. 20 is key on the daily. Again, we're still above the 20, I believe, on S&P futures. Yes, we are. You can see it here, that purple line, and we're above the 20 MA on the dollar as well. So something's got to give if that inverse correlation is still in play, which it looks to be. That's exactly where we are. So again, let's bring up about the dollar back to this quadrant here. So the dollar being very, very key. You know what? Let's go ahead and zoom out for the dollar so we can actually get a little more context on it. Again, we know the hourly above the 20 MA. We talked about the daily above the 20 MA. On the hourly, it's above the 200 MA. Sorry. We were above. We broke below that for about a day yesterday, hence the bounce in the market. Let's go ahead and get to the weekly. And you can see just straight shot, nothing has really changed there. If we expand it to the max weekly candles, you could see 110 being a very key level. That'll get us back to this trend line that we broke out of back in September. So you can see that Fibonacci line. How about that? Right from the bottom here, 114.76 rejected pretty cleanly. So again, we're not near the highs of 2001, 2002 .com bubble, 9/11 as well. 121.02 is that high on the dollar index. We are now at 112. It looks like, again, this kind of reinforces that bottom 200 MA call I've been talking about. Again, we could always go less or more, 100 or 200 points. That's what happened in COVID. And when I said 2,300, matching the 2018 fall, we got as low as around 21.97, 21.98. Not bad, close, but again, still, that was the actual bottom back in COVID. But again, the dollar rejecting this fib at least shows at least a pullback, in at least a breather in this currency. Really, headlines with England, obviously Europe, obviously Japan as well. Japan dollar yen, we'll go back to that. Now flirting with 150, guys. Remember, this thing was around 110, 105 earlier in the year. Big move in the Forex market. As a Forex trader, I used to be a Forex trader back when I started GAR Capital in 2014. I remember the dollar was kind of around 130 on the dollar yen, trading the euro at 110, 112 or whatnot. Now we're at sub 99, we're sub 97 at this point, or sub 98, 98 cents per. So again, markets move. This is what you want as a trader. It's volatility. So back to it. Gasoline futures, $2.56. Gold futures are down 1%, obviously with the dollar being higher. Silver up 1.29, again down 1.29%. So again, looking at the commodities, the coppers, the golds, and the precious metals. they're underperforming today or down this morning because of the dollar, yet crude oil is up this morning, even with a stronger dollar. Let's go to the refiners really quickly and see how they're trading. XOM is slightly green this morning, even in a red market. You could see CVX slightly down, actually slightly up from the close yesterday. So energy has been propping up the indices. At least EPS growth is concentrated just on this energy sector. So again, energy is still relatively cheap, discounted to cash flow. Again, I like CVX. I own it. Again, I'm looking for a better price. Maybe fill this gap here of around 152 or so. XOM, great numbers. Again, we know what they are in terms of energy conglomerate. 92.35. There's a gap to fill there. So again, yes, I know the 200 MA is a call that I'm looking for a bottom. Again, we keep bouncing off that. And with everything priced in, a hawkish Fed, a possible change in Congress, inflation possibly peaking, used car prices are falling, mortgage rates are still high, going high, more housing demand will go down, mortgage demand was down today. So again, I still think we have peak inflation, still high inflation, but not in the summer peak that we have. You could see energy prices coming from around what, 130, 140 down to around sub 90 now. And again, we hit 75 just a couple weeks ago. So again, it seems that everything is priced in. Again, I would like to see bond yields fall. We'll go over the bond yields here in a second. Keeping it moving, euro dollar 97.78. That's down 78 pips. Dollar yen is up 53 pips, 149.75. Pound dollar 112.39, down 80 pips. Bitcoin flat, 19,115, 12.95 for Ethereum, even with a strong dollar. That's interesting to see. Let's go ahead and do a couple of chart work together, and then we'll answer some questions. Here's SPX, same chart that we posted, I believe, about a week or a week and a half ago on Instagram and Twitter. Again, we did fill that 3,700 gap, so at least that. So we can remove this circle here. Oh, actually, I'll just leave it on for now. Now we have the trend line coming down as time progresses, as with the chart reading from left to right in chronological order. Again, 3,800 being our top resistance. It was 3,900. We didn't get there. We rejected. So again, 3,800. I still have that target for around 3,820 S&P futures, 3,800 SPX. That just gets us back to levels not seen in about 2 weeks ago. Again, after that, we could definitely roll over and come back to this trend line. Absolutely. But you could see that 3,600 level right here. That is the 200 MA on the weekly. Again, that still seems to hold. That will be my stop. If I do go long or anything, I didn't find a good price to go long on anything special like futures or anything. So again, 3,800 is my target on S&P cash index, which is SPX, about 3,820 S&P futures. Again, that should come with seasonality. Obviously, we know that October towards the tail end going into November is relatively strong. We've gone over that chart many times. Let's go to the 2-year. Again, now breaking out of year-to-date 1-month highs. You can see now at 4.53%. You can see the 10-year continuing to go higher. That is a new 17-year high, 14-year high on the 10-year yield. So again, the Fed is getting what it wants. It wants to wring out speculation. It wants to bring down asset prices, make money more expensive, hence higher rates. Now that was a mouthful. I know that was a lot to go over. Let's answer some questions. ISRG says Austin. Let's go over it together. ISRG. ISRG Intuitive Surgical. I believe someone took a stake in them. I want to say it was Elliott Management. So they are up today, trading at 214. Looking at the daily, any kind of resistance ahead of us. 220 is a gap to fill as well on ISRG. I've never traded this name. So again, if you are trading it here, if anything, I probably want to fade just the news and then see if we can hold around 207. And if you do hold 207, maybe you can go ahead and buy stock, at least based on a price basis. I don't know much about their financials, honestly. Thoughts on the 10-year and the 3-month going inverted yesterday? Again, that's another recessionary signal. Again, another piece of bad news. Again, let's see how the market goes ahead and responds to it. Again, I think a lot of focus is on earnings. Procter & Gamble reported earnings today. They did beat, but again, a hit on their profit due to the strong dollar. Again, same with Netflix, about $1 billion charged just because of Forex slippage. The dollar is important for multinationals, guys. Think of the big guys who do business overseas. I mean, you name them, big industrials to banks, money center banks in the U.S. not so much, but international banks. You also have retail stores that have international presence or apparel, like a Nike or Nike or Adidas or anything like that. Again, those currency slippage are going to hurt earnings. The question is it baked in? And so far, it has been. So again, that bar is very low on the earnings reports. Again, forecasting is very low. We know that Apple didn't even give a forecast. So again, seeing these yields rise, again, it's a concern, and I'm surprised that we're not down more just on that news alone. Because if you would have said this about 4 weeks ago, pre-CPI, now we'd probably be down about 300 points on the Dow, double where we are now with these yields going up. Again, it gets to a point, guys, that it becomes a new normal, and now we're kind of just already immune to it. We are already pricing it in. And keep in mind, guys, if you're trading today or you're investing today, you're really pricing in 2023, not really 2022 or the tail end of it, because we already know what the Fed's going to do. 75 basis in November and December. I think that's pretty much locked in and baked in, and that's where we're getting our equity prices from, just based on that. Any kind of upside surprise, again, you never know. I'm not saying we should bet on that, but again, any kind of upside surprise, peace in the Ukraine, possibly, COVID lockdowns end in China, something around that area, maybe a CPI gets cooled in November, we don't know, but we're going to go ahead and see how we go from there. ENPH, I did not research that name. Enphase has been doing very well. That I know. Look at the daily again, holding the 100-day moving average. And I was looking at some of their financials and everything in terms of PE. It's a little high, obviously. If you are looking to buy this name and you're trying to buy at least some weakness, I mean, I don't think 240 is not a bad price either, I guess, on the weekly. On the daily, again, right around this area, there's a gap to fill on the daily at 220. 220, 240 isn't a bad idea. Again, I believe it's a solar company. So again, not against owning solar companies or anything that's alternative energy. Obviously, I'm a Tesla shareholder and a NEO shareholder. But again, does this thing get too high too fast? The midterms are coming. If we get a Republican Congress, they're not very friendly to alternative energy. So again, this could be something that you may want to wait till after the 1st of November and see where politics go. Hate to trade around that, but again, it does matter. ARKK that just did a report on used car business. I didn't read that note this morning. I was reading Bloomberg, but that didn't come up, Austin. I was going to take a look at that. ARKK, interesting enough, up to, I believe they are pretty much down about 40 cents. Again, a lot of the names that they do own, like a Roku, is up today. So again, we'll see if the high growth beta names do catch a bid, even though, the Dow and the S&P are down today. Small caps underperforming. Let's see if ARKK is one that you could bottom feed. I have ARKK and I'm down big on it. So again, if there's something that you're looking for a turnaround story, you're trying to see, hey, if I can catch a bottom here and play a bounce, ARKK isn't a bad idea. The question is, there's a lot of earnings that need to come in for those names. Are they priced with a high interest rate environment? If you think it's peak yields, if you think it's peak inflation, ARKK could get to 53, no problem. The question is, how long is this recession and this global tightening, or at least American tightening, how long is this going to go for? So again, ARKK being a hell of a lotto if you are optimistic at all. Some senators were buying ARKK last week too. You know the saying, Austin, follow the money, right? So if that's the case, ARKK could be something. We will see. I still think the midterm elections are big. That's Congress. So again, we'll see what they go through in terms of economic policy, what they change in terms of industries. We know that the Republican Party is a little more friendly to oil and drilling. That would help crude energy markets. And then you have the other side, more of the Democratic side, who is more into infrastructure spending and, of course, climate change spending. So maybe an Enphase would be something there. That'd be the horse to back if you do get a Democratic hold in Congress. If you believe in a red wave, then again, energy companies even become more interesting. Last tidbit I want to go over today, and we'll wrap it for the session. Here we go. This is the headline from the Wall Street Journal. Day traders go back to their day jobs as stock market swoons. I retweeted that. And again, this is a point I want to make. This is not easy to do this every day. It's a mental battle every single day. You're fighting greed and fear. I've been doing this now since 2014. We just celebrated our 8th year of a company. And I think this is just a testament to those out there that follow us and have been with us that long, or even a little less than that, obviously, a couple years, or maybe you just started watching us. Guys, this is our third bear market in 8 years. It almost becomes a regular occurrence. And this is exactly what happens. You get this rotation out of speculative jobs or speculative employment or side hustles, whatever you want to call it. But again, it's the bear markets. The ones who survive the bear markets, guys, those are the ones that are going to come out on top. It's always happened that way. You'll always have, different cryptos, different NFTs, different things, .com stocks, housing in 2008. You get that. You get these boom and bust cycles. This is what the Fed wants to do. So again, another win for the Fed. But for those who are still working on their craft, watching this video, reading the charts, watching CNBC or Bloomberg or whatever, even taking a day or a couple of minutes out of your day to just read the paper and read about the markets. This is important because this shows you not to quit. Yes, a lot of people kind of saw this as a hobby. This is not a hobby. This is going to take a lot out of you. This is something that, if you put the time in, put the screen time in, put the work in, the charting work, you're going to succeed. People say that you won't succeed. Yeah, sure. Not everyone's an NBA player. I understand that. Not everyone's a professional athlete or an actor and actress. It doesn't mean it's impossible. Again, I believe that if you work hard enough, even with minimal talent, again, I'd rather be a hard worker with not much talent than someone who's a lot more talented and that doesn't work hard. Again, it's all about effort. Anything that you do in the future or anything that you do now over time, small compound changes and habits, they set those rewards and goals down the future. And then your goals today will be small hurdles tomorrow. You'll just get used to it. And again, guys, this is not easy. Everyone thinks it is. It is not. It is very difficult. But if you put the energy, time, and mental focus, you're going to do great things. And that's just about anything, let alone day trading. Just wanted to give you that heads up. Have a great rest of your morning, guys. I will catch you guys tomorrow for the morning note. Cheers.